Minister Ong Ye Kung.
Mr. Speaker, I thank all the members who have spoken on the bill and their support of its introduction. On behalf of the Deputy Prime Minister and Minister in charge of MAS, let me now address their questions, which are a number. Let me start with customer protection. Mr. Satyandi asks about how customer monies are protected by payment service providers if they go insolvent, and I've explained this in my speech. And that major payment institutions are required under the bill to protect customer monies under prescribed methods. Mr. Satyandi was also concerned that services like limited purpose, monetary value and loyalty programs are excluded from the regulatory ambit of the bill. The bill governs the provision of payment services. So the issuance of stored value cards like EasyLink cards or Nets cash cards that we are familiar with and can be used to pay for various goods and services will be regulated as a type of payment service, and customer monies in those cards will be protected under the bill. However, limited purpose monetary value like supermarket shopping vouchers, loyalty programs like frequent flyer miles cannot ordinarily be used to pay for goods and services provided by unrelated third parties. So likewise, prepayments to bike-sharing platforms for their services are also not payment services. So all these activities are excluded from the ambit of this bill, which are for payment services. This is also the approach taken by jurisdictions such as Australia, Hong Kong, and the UK. On a technical point, Mr. Muhammad Irshad asked for the location of e-money and virtual currency definitions in the bill. These terms are defined in the interpretation clause of the bill, but we have changed the term from virtual currency to digital payment token, instead to accurately reflect the nature of these units as tokens and not currency. Next, cryptocurrency. Quite a few questions on this topic. Mr. Satyandi and Mr. Louis Ng asked about customer protection in cryptocurrency services and for initial coin offerings or ICOs. Ms. Leon Pereira also asked about the approach and time frame for regulating cryptocurrency services. I explained in my speech that our intent currently is to regulate DPT services only for money laundering and terrorism financing risk. This is because the use of DPTs in Singapore is actually very low compared to countries like the US, Japan, or South Korea. So at the moment, we do not intend to regulate DPT services for customer protection. We also need to be mindful of what Mr. Satyandi pointed out, which is regulating DPT for customer protection. It can have a legitimizing effect when digital tokens are still at a nascent stage of development. This may send the wrong signal that Singapore is promoting or welcoming such activities. And because we are regulating it, it actually gives people comfort that this is a legitimate activity that we are promoting, and gives the public false comfort that their DPT investments are safe. Similarly, running a registration system for ICO, as Mr. Louis Ng has suggested, can also have the same legitimizing effect. So we are careful about this. We have to balance the considerations carefully. MAS is monitoring this space and will continue to put out consumer advisories aimed to prevent investment losses upfront. MAS also continually updates its investors alert list to include entities that have been misperceived as being regulated by MAS. In this regard, DPM Daman has also made it clear in Parliament earlier last year that DPTs like Bitcoins are very high-risk investments. Investors may lose their shirts. To adequately caution investors, MAS will require DPT service providers to disclose clearly to their customers that their investment is not subject to regulatory protection. Mr. Louis Ng asked if we would consider penalties for fraud and misuse of funds raised by ICO issuers. There are existing penalties for such illegal activities, and they are administered by the Singapore Police Force. Professor Lim San Sang, Mr. Leon Pereira, Mr. Louis Ng all spoke about financial literacy. and consumer protection should also extend to consumer education. Professor Lim proposed public education to communicate the advantages of using e-payment and good personal financial habits. Mr. Saktiandi expressed that we should include senior citizens and the less tech-savvy amongst us in our e-payments journey. I'm happy to report that MAS and other agencies have been reaching out to the public on these fronts through MoneySense, the National Financial Education Program. MAS has been working to raise public awareness on using e-payments safely and responsibly, and we will continue to do so. The public sector is also raising citizens' digital literacy and familiarity with new technologies through initiatives such as IMDA's Digital Inclusion Program and the Skills Future for Digital Workplace Program. On financial inclusion, Ms. Anthea Ong highlighted the difficulties faced by migrant workers in accessing e-payment solutions and bank accounts. As she noted, payment firms are indeed collaborating to bring new fintech products to the market. Indeed, fintech has enabled us to remit money overseas via e-wallets. They are easy to use, usually free, no minimum balances required. As this bill strengthens safeguards for these payment services, we should see greater adoption from consumers, including migrant workers. At the same time, banks are working on enhancing financial inclusion for migrant workers. For example, POSB has partnered with MOM to enable foreign domestic workers to open bank accounts seamlessly when they submit their online work permit applications. The initial deposit is waived for these POSB payroll accounts, which also provide low-cost remittance services. MOM is currently consulting stakeholders on the option of mandating electronic salary payment for migrant workers. It's not just that this is a 5.6 billion market, but I think this is the right thing to do. Next, Mr. Desmond Chu, Professor Walter Teixeira, and Mr. Saktiandi asked about business competitiveness and said that financial institutions should not be overly burdened by new rules. They asked how the bill compares to those in other jurisdictions. The bill contains similar aspects to regulatory frameworks in other financial centres, such as Australia, Hong Kong, and the UK. What this bill sets itself apart from other jurisdictions is that it comprehensively covers 4 risks identified in the payments landscape in a single legislation. In other jurisdictions, these risks are addressed by different authorities under different pieces of legislation. As explained in my speech earlier, MAS has consciously balanced mitigating risks with promoting innovation. The best way to do this is to avoid a one-size-fits-all approach and instead adopt a risk-based approach, such that the regulatory requirements are commensurate with the risk of the business activities. And that is why we have 3 classes of licenses in this bill. In the second reading speech, I explained how a major payment institution can provide services above specified thresholds. Professor Walter Teixeira asks why the thresholds are not in the subsidiary legislation and in the main bill. Indeed, specifying thresholds in the subsidiary legislation is actually easier for MAS. It gives us flexibility and more administrative ease. But to the market, it may mean less certainty. So on balance, weighing this, and this being a new bill, we err on the side of giving certainty to license applicants and licensees and set out the license class determining thresholds in the bill itself. MAS can still amend it through this House should we need to in future. Regarding transitional arrangements, Mr. Desmond Chu asked if 12 months was sufficient. In the public consultation, almost all entities who asked for a longer transition period requested a 12-month period, and so MAS agreed that this is a sensible timeline. But I think Mr. Desmond Chu didn't deliver his question. Mr. Saktiandi correctly noted that Singapore has been fully supportive of the G20 and the Financial Action Task Force. Taking our AML-CFT commitment seriously is something we must do to maintain the integrity and reputation of our financial system. However, we will take care to calibrate our AML-CFT measures using a risk-based approach too. We will consult the industry with the proposed measures to ensure that the measures are risk-appropriate, fit for purpose. Mr. Louis Ng asked if MAS has powers to obtain information of individual payment system users from private entities. As a regulatory and enforcement agency like all others, MAS have such powers. But like all the other enforcement and regulatory agencies, we will exercise them judiciously for the purposes of this bill. For example, MAS may require demographics of individual users to determine any gaps in access to payment services by any particular population segment. Or we may request for such data for the purpose of investigation of a breach of law. Mr. Satyandi and Mr. Leon Pereira also asked about the rationale and considerations for arriving at the proposed stock and flow caps on personal e-money accounts, and if these limits could be prohibitive. I've explained the rationale for having the caps in my second reading speech, and that it is important to preserve stability of the financial system to prevent a significant outflow from the banking system. As to why they are set at $5,000 and $30,000, these were calibrated in view of a few considerations. First, most e-money issuers have self-imposed stock cap of less than $1,000. Second, based on data from the latest household expenditure survey conducted and after adjusting for annual growth rates, the average monthly and annual household expenditure per household member in the 61st to 80th percentile group is around, it ranges from $2,000 to $24,000 respectively. The proposed amounts therefore provide sufficient headroom for most individuals, even if they were to pay all their expenses of the month out of one e-money account. Nonetheless, these are initial numbers, and we can review over time. And as suggested by Mr. Leon Pereira, MAS is also prepared to grant exemptions by way of regulations to facilitate specific customer needs. MAS will soon be consulting on the regulations and will consider any further industry feedback. Professor Walter Teixeira also asked something about fit and proper checks. The tech industry can be assured that this is a nascent industry. We do understand for fintech companies, the founders are often of technology background, but we also recognize that as they grow, as they serve bigger customers and become a bigger institution, they also start to recruit more diverse talent into their fold, into their leadership team, including those with banking and financial services experience. So it is an evolving criteria, and MAS will constantly review that to make sure it keeps up with the times. There are other measures that MAS will set out in subsidiary legislation that will be published for consultation. These include the annual fees that Mr. Muhammad Irshad asked about. These also include the measures that Mr. Leon Pereira and Mr. Satyandi asked about, such as the obligations for disclosures to end customers, and the steps that standard payment institutions must take when they exceed specific thresholds for their license class, including suitable grace periods, and the need to be in order to be upgraded to a higher license. We will take all your comments into account regarding the specificity of the disclosure to customers. Mr. Louis Ng asked how MAS intends to enforce provisions against foreign established licensees and whether foreign regulated payment firms would be recognized in Singapore. Anyone carrying on a business providing payment services in Singapore needs to hold a license under the bill, unless it is exempted. The bill requires all licensees, local and foreign, to have local presence, i.e. a physical place of business or registered office in Singapore, where customers can seek redress and where MAS can access the licensee's books. Further, licensees must have at least one executive director who is a Singapore citizen, a permanent resident, or a person in a prescribed class. Mr. Satyandi has provided feedback that payment service providers, including DPT exchanges or service providers, have had their bank accounts closed. I should clarify that most payment service providers do not have problems opening and maintaining corporate accounts with banks. To help firms that have faced such difficulties, MAS has been facilitating discussions between banks, fintech firms, and DPT service providers. While MAS does not intervene in the commercial decisions of financial institutions, such discussion should lead to positive and meaningful outcomes. There are a number of questions on the limitations of activities of payment service providers. Mr. Satyandi pointed out that Hong Kong has a more liberal regime and is considering to allow payment services providers to offer banking services. What Hong Kong is doing is to issue digital banking licenses. With regulatory requirements, they are much higher than pure e-payment services firms. In Singapore, banks too can opt for a fully digital business model. And indeed, today, Singapore's residents can already open a bank account with any of the local banks and operate it without having to visit a branch. So the real question is whether there are benefits for Singapore to increase the number of banks in Singapore by admitting primarily digital startup banks. This is a much broader banking policy that has to be studied carefully and quite distinct from the bill. Professor Walter Teixeira, Mr. Muhammad Ershad, Mr. Leon Pereira all ask about cash withdrawal and lending measures for licensees. In the second reading speech, I explained why we are not prepared for licensees to offer such services. Essentially, these are core functions of banks which have a unique economic role. They are intermediary for savings and investments. They take in deposits and then on-lend to the economy, as I've explained in my second reading speech, to allow e-payment service providers who are subject to much lower thresholds, much lower regulatory regime, to be able to provide lending activities, I think undermine the position of the banks and undermine the role of the banks, and to likewise for the thresholds that they can hold in the stock and cap. If it's set too high, it can potentially also lead to a significant outflow of deposit and cash liquidity out of the banking system. So because of all this prudential consideration and stability consideration for our financial system, we have prohibited such activities. We have not extended the same prohibition to cash withdrawals from non-residents' e-wallets, as Mr. Leon Pereira pointed out. This partly facilitates tourist spending, but more importantly, the non-residents' e-wallets draw on the bank deposits from other countries and doesn't affect our banking system. It is also not just a matter of FTA compliance, but also a broader consideration for our banking stability. We are still learning about this whole industry, how it's evolving, but banks are an important part of our economy. We are taking quite a cautious approach at this moment, and the situation will continue to evolve, and we'll have to consider it as time evolves. Mr. Muhammad Ershad also asked about what plans the government has to encourage innovation by financial institutions. To encourage innovation in financial services, we have the MAS regulatory sandbox. The sandbox is open to all firms that wish to experiment with a technologically innovative solution in financial services within MAS's regulatory ambit. And the sandbox options are being improved. MAS has proposed the creation of predefined sandboxes known as Sandbox Express, meaning it's easier and faster to get in and to get out. Members also ask about Singapore's payment ecosystem and the competitive landscape Mr. Louis Ng asked, and the competitive landscape of the industry. Mr. Louis Ng asked if there should be a dedicated regulatory authority to oversee competition and innovation in the payment space. This is not necessary for us because between MAS and the CCCS, we will cover the issues on competition in payment services. We have found this collaborative approach suitable to address any competitive issues that may arise in Singapore. Professor Walter Teixeira also asked how MAS will ensure that a competitive market exists for safeguarding services of fintech firms. This is actually quite a competitive service for the banks. Major financial institutions are also familiar with the standard of behavior in the Singapore market, and we will not hesitate to act on complaints regarding any anti-competitive behavior. As for the thresholds to enforce against anti-competitive behavior, it is actually quite an involved process. Depends on the service, the players in the service, the size of the companies, the industry structure, the value chain. Each case is different, and regulators have to make a fairly laborious determination based on the facts and the alleged anti-competitive behavior. Mr. Satyandi asked when we can have a common e-payment platform and whether merchants affected by interoperability measures can expect assistance from MAS. As a small market, Singapore is especially susceptible to one provider dominating a market and abusing their position. We have therefore deliberately taken a different approach so as to allow more competition and innovation in the payment space. We then take steps to ensure open architecture and interoperability between different payment systems. With that, we enhance the ease of use and convenience for consumers and merchants while allowing and promoting competition in the space. So we very much share the wishes of Professor Lim San San, while being cognizant of the risks in a small market like ours. As I've explained in my second reading speech, initiatives such as FAST, PayNow, Unified Point of Sale, SGQR, they serve to achieve interoperability, convenience, and ease of use. With all these in place today, I hope all of us as consumers also can realize how e-payment is functioning today compared to, say, a few years ago. It's actually quite easy to use now. E-payments can be made through a simple tap and go of your credit or debit contactless card, or through your smartphone, or at a UPOS terminal. Sending money to your friend can be done quite easily with a few taps on your smartphone. With time, I'm confident that e-payments will be even simpler to use, and more consumers will grow to trust and accept e-payments. Another thing that we are doing is to accept non-banks into the FAST system, and the work group is now is ongoing to discuss this. With that, let's say a non-bank e-wallet join FAST. What it means is that I can transfer my non-bank e-wallet money to my bank account, and from my bank account, I can withdraw the money. Mr. Speaker, let me end by addressing Mr. Mohammad Ershad's question about where Singapore stands in digital innovation and the need for us to have a culture of innovation. Our standing is not too bad after all, at all. We are a city-state, unlike US, China, or even Indonesia, with a huge market. We are a well-regulated financial hub, and we ensure fintech companies can operate in an environment full of opportunities and with certainty. Our annual fintech festival is the largest in the world. We didn't plan it to be the largest, but it turned out to be the largest, because fintech firms want to come here so they can network and promote their services to the financial industries. And for the fintech firms, it's especially in view that they can promote their services to the large financial institutions and global institutions who are here in Singapore. So supporting the growth of major financial institutions and fintech startups is therefore not a zero-sum game. They are all part of the financial ecosystem. Understanding that and taking a risk-focused, modular approach to regulation will contribute meaningfully to Singapore's innovation culture. I understand Mr. Mohammad Ershad's broader points on culture and mindset. I do agree with many of the points you raised, but those are really beyond the ambit of the bill. At some point, perhaps during your education debate, I'll be more than happy to address some of the issues you raised. With that, Mr. Speaker, I beg to move.
The question is that the bill be now read a second time. As many as are of the opinion say aye. To the contrary say no. I think the ayes have it. The ayes have it.
The Payment Services Bill.
Committee stage what day?
Now, sir, I beg to move that Parliament will immediately resolve itself into a committee on the bill.
The question is that Parliament will immediately resolve itself into a committee on the bill. As many as are of the opinion say aye. To the contrary say no. I think the ayes have it. The ayes have it. The question is that clauses 1 to 126 stand part of the bill. As many as are of the opinion say aye. To the contrary say no. I think the ayes have it. The ayes have it. The first and second schedules. The question is that the first and second schedules stand part of the bill. The question is, as many as are of the opinion say aye. To the contrary say no. I think the ayes have it. The ayes have it. Bill to be reported. Minister Ong.
Mr. Speaker, I beg to report that the bill has been considered in committee and agreed to without amendment.
Third reading what day?
Now, sir, I beg to move that the bill be now read a third time.
The question is that the bill be now read a third time. As many as are of the opinion say aye. To the contrary say no. I think the ayes have it. The ayes have it.
The Payment Services Bill. Item 3, the Currency Amendment Bill, second reading.
Order. I propose to take a break now. I suspend the sitting and will take the chair at 4:50. Order, order.